I believe we're in the third phase of the bull market that started in 1971. This is the third and final phase, in my opinion. If we were ever to use gold as backing in today's world, gold would have to be exponentially higher. And, again, pick a number. I've heard, 20,000, 40, who knows? I don't know, but you'd have to have a lot more gold. Certain countries would have to have a lot more gold, and the gold price would have to be a lot higher.
And with silver, the fact that it's just a tiny little market, it's thinly traded. There's just not that much silver out there. There's no real upside limit to a tiny, thinly traded market. $100 silver is a very reasonable target over the next couple of years, and it's possible that it really overshoots. Then you think, all right, what does $4,000 worth of silver look like? And it's a nice big pile of beautiful metal sitting on your table,
Recent volatility has defined the precious metals market, with gold holding above the $4,000 mark after an earlier surge. Both gold and silver saw strong upward momentum on increased safe haven demand and growing expectations for a potential Federal Reserve rate cut. However, this rally has faced resistance, and a recent pullback was triggered by hawkish statements from Fed officials, which tempered market optimism for an imminent December rate reduction. Despite the fluctuations, analysts still see a potential for continued gains, noting bullish technical signals for both metals in the near term. Joining us today is Frank Giustra, a renowned mining financier, philanthropist, and founder of the Fiore Group. Giustra, a longtime gold advocate, argues that while the price of gold is currently at $4,000 or $4,100, it could go a lot higher. He contends that the true driver of the rising gold price is that fiat currencies are going down in value, citing an unsustainable U.S. fiscal situation that will inevitably lead to a dollar crisis. Ultimately, he believes gold will be a critical part of a new global monetary system. Let's watch clips from Frank Giustra's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
$4,000 or $4,100 today may seem high to a lot of people. I would say that it could go a lot higher. And I've never predicted gold prices, as you know. But I suspect it could go a lot higher. And the example that I use is if you look back, let's say we were sitting here in 1971. It's 1971. And I'm going to say to you, in the next 10 years, gold's going to go up 28-fold. You would have thought I was nuts, right? Well, it did. In 2001, same thing. As I sat here and said, in the next 10 years, gold's going to go up 8-fold. Would you believe me? No. So here we are at $4,000, and if I made a claim, I'm not going to make any claim because I don't know where gold is going. I know it's going higher. It could be exponentially higher. It wouldn't surprise me. But pick a number. That's what I say about gold. Pick a number because I don't know, but it could be exponentially higher. And because I believe we're in the third phase of the bull market that started in 1971. This is the third and final phase, in my opinion. Okay, and this will be I said it in 2019, I said this will be the most explosive phase once gold breaks through 1900, which it finally did. And I think this is going to be the best run of your life.
But how long is it? How long is this phase?
I don't know.
But what happens after the explosive phase?
There's going to be well, if we survive as a species, no, I'm dead serious. Because this kind of stuff only happens every 70 to 100 years. You're seeing a shift in the global order like we haven't seen in 100 years, and 80 years. And so I worry, and I told you a long time ago, all you folks that want $5,000 gold and $10,000 gold, be careful what you wish for. That's not the kind of world you want to live in. So assuming we survive as a species, I would say that'll be when there is the creation, after a very bad outcome, there will be the creation of a new global monetary system. And what that looks like, I don't know yet. I suspect gold's going to play a role, at least in the initial years. But who knows what it's going to look like. But it's not going to be the US dollar. Keep in mind, if gold is going to play a monetary role. Now again, the example I gave you earlier about gold being used as for settlement purposes of excess currency, that's not gold backing. That gold backing is a different system that usually is tied to money supply, like we had 100 years ago with Britain and the United States. if we were ever to use gold as backing in today's world, gold would have to be exponentially higher. And, again, pick a number. I've heard, 20,000, 40, who knows? I don't know, but you'd have to have a lot more gold. Certain countries would have to have a lot more gold, and the gold price would have to be a lot higher. It started on a Saturday morning, right after gold hit its absolute high. I think it was 4,400, and it was like unbelievable. All of a sudden, Twitter lit up, and it was like this massive campaign: dump gold, buy Bitcoin, and it certainly felt coordinated to me, and it was so transparent and amateurish. It was almost funny, that the way they did it. And it failed, by the way. It didn't work. There was, they started regurgitating old clips of, well-known Bitcoiners predicting stupid prices, like Michael Saylor talking about $500 trillion Bitcoin. I mean, I think he's the worst thing that ever happened to Bitcoin. Regurgitating these clips of, you see them all the time. It'll be $250,000 in 2 months. For 5 years, I've been watching these predictions. It'll be $250,000 in 2 months. They kept recycling these things. And Warren, this AI-generated video of Warren Buffett slamming gold and telling people it was so bad.
That's what people thought was real, right?
Yeah, they thought it was real. That and it was all AI-generated, and it all happened starting one morning. So to me, yes, it was coordinated. Now, who's behind it? I have no idea, but it certainly was. It was transparent, and to me, it just showed that there's a desperation in the Bitcoin crowd. And again, I apologize to any Bitcoiners here, but they've been claiming that Bitcoin is digital gold, and I've been saying for 5 years now, it's not. It never behaves. It doesn't behave like gold. Central banks around the world are buying Bitcoin. It's not. It's a risk-on asset. It does very well when the game is risk-on. When the game goes risk-off, Bitcoin comes down just like, say, the tech stocks come down. Now, people predict that someday that will change and that Bitcoin aspires to be digital gold, but it certainly isn't today.
The global precious metals market is reacting to historic levels of central bank gold accumulation, driven by nations seeking to diversify away from the US dollar amid rising government debt concerns. Concurrently, silver has been officially designated a U.S. critical mineral, recognizing its strategic and irreplaceable role in the energy transition and advanced defense technologies. This policy change is expected to drive long-term industrial demand and exacerbate the current market deficit, strengthening the outlook for both metals. Financial analyst and author of DollarCollapse.com, John Rubino, argues that fiat currency devaluation, necessary to service unsustainable debt, is the core catalyst pushing gold and silver exponentially higher. He suggests that gold's decades-long bull market is entering an explosive third phase that may eventually pave the way for a new global monetary system. Furthermore, Rubino highlights silver's dual nature as a monetary and industrial metal, arguing its tight supply and new critical mineral status are setting the stage for a dramatic silver squeeze. Let's get into the interview.
Silver hitting above the $50 mark. We're hovering around the $53 mark. Gold going up seems like $100 a week these days. What's the cause of all this, John? What are your thoughts?
Well, a big part of it is the dollar devaluation play. People have just concluded that we have no choice but to inflate the dollar away, and the euro and the yen and the pound sterling and the yuan. All the big currencies have to be inflated away to cover all the debt that we've taken on. And people have kind of known that in theory for a long time, but now it's becoming more real. And you're seeing the central banks of the world just snarf up all the gold they can get a hold of. And people are taking their cue from those central banks. So there's a lot of gold buying across the board now. And then with silver, silver always had two really good stories. It was a monetary metal attached to gold in a lot of ways, and an industrial metal that we actually really need, and that if it was just an industrial metal, we would still be running a silver deficit that'll turn into a shortage that'll blow the price way up. So I think people are recognizing that too, including the U.S. government that just named silver a critical mineral.
Right.
or critical metal. And meaning that the U.S. economy does not function without the metals on that list, and silver is one of them. So now there's going to be a lot of stockpiling. Where if you make, say, missiles, for instance, or solar panels or whatever, you've got to have a certain amount of silver available in order to meet the orders that are coming in. And you can't just wait until the day before you need it and buy it on the spot market anymore, because spot markets are unreliable, especially for crucial things like silver now is. And so what you're going to do is stockpile. You're going to buy ahead of time. And I think that's a lot of the demand for silver too, is people who might not be using it right away, but they want it to be there when they need it. You put those two things together, and gold is not that huge of a market, but it's much bigger than silver. So with central banks buying gold, that's a wind at gold's back for as far as the eye can see. And with silver, the fact that it's just a tiny little market, it's thinly traded. There's just not that much silver out there. And we're using up above ground stocks at an accelerating rate. So I think there's a real possibility of a silver squeeze here that people have been talking about for a while. And I think, there's a decent chance that that's something that happens in some form in the next few years, where the metals exchanges just, start intimating that they don't have enough silver, and then somebody proves it by defaulting and paying out in cash on futures contracts instead of physical silver. And then boom, that's it. Then you get your triple digit silver with a bullet. There's no real upside limit to a tiny, thinly traded market that is suddenly in default. So I think $100 silver is a very reasonable target over the next couple of years, and it's possible that it really overshoots. So I think 100 is where you start taking serious profits, but don't sell everything, because there's the potential for the next parabolic run, and that could come sooner rather than later if silver breaks into 100. What you want to do with any kind of investment, but with commodities in general, and gold and silver specifically, is you just want to be in the on the train that's leaving the station. You don't know when it's going to leave, but you know what direction it's going to go eventually, and you just want to be there. You want to be on the right side of history, which in the case of commodities is shortages leading to much higher prices because of either industrial demand or monetary demand. Uranium and copper, it's industrial demand. They are needed for next generation power plants and power transmission. Silver is needed basically everywhere, but also as a monetary metal. It's the kind of thing that if gold gets too expensive, which for a lot of people, it is in a visual sense. Like you put a grand in the palm of your hand, and it just looks like this small gold coin. It's like the size of an old silver or $50, but it's worth $4,000 now. And then you think, all right, what does $4,000 worth of silver look like? And it's a nice big pile of beautiful metal sitting on your table. So at this point in precious metals bull markets, people normally start doing that kind of a calculation. All right, gold's going to go up, but boy, is it expensive. Look how much silver I can get for the price of one gold ounce. And then people start buying silver. And then you get the parabolic move up because, like I said, it's a very thinly traded market. You get just a little bit of extra generalist money coming into this sector, or at least a little bit by comparison with generalist money. And it'll push silver way up. And I think that's the kind of thing that we will see pretty soon. It might be 5 years or it might be next week. That's the thing. So you want to be positioned now, because you're hearing all this stuff, right, about different commodities exchanges where the amount of silver they've got on hand is falling precipitously, and it's not clear how much more is going to be left, because more and more futures contract players are standing for delivery. And all you need is one contract on the COMEX to be settled in cash instead of metal, and boom, silver becomes unobtainium, and it goes straight up.
The current surge in precious metals is viewed by John Rubino as a dollar devaluation play, as major global currencies must be inflated away to address mounting debt, Rubino highlights that central banks are buying gold, and silver is benefiting from dual demand as a monetary metal and a critical industrial commodity essential to the U.S. economy. He predicts that silver's small, thinly traded market, combined with accelerating demand and necessary stockpiling, makes a $100 price target very reasonable and believes a silver squeeze is a real possibility. Frank Giustra sees the current rally as the most explosive third and final phase of the long-term gold bull market, suggesting the price could go exponentially higher. However, he warns that while high prices are expected, a run to 5,000 or 10,000 gold would signal a severe systemic crisis and a shift in the global order. Ultimately, Giustra believes this explosive phase will lead to a very bad outcome, resulting in the creation of a new, non-US dollar global monetary system, with gold playing a likely initial role. If you found this breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.